Morning, I'm Daryl Jones, Director of Research at Hedgeye. Welcome to the Macro Show for August 23rd, 2021. Got Keith back in the studio. I'm back. The Quad 3 bromance is back on.
Yeah, it was a Quad 4 scare, though.
Yep, there was.
Were you a little scared of the either the storm, the surge in the Northeast, or the Quad 4?
Yeah, they're sort of comparative, those two. You know, it was sort of a storm that didn't happen, at least in Connecticut, and then Quad 4, maybe happened for a day. But
It's an amazing thing. I mean, and again, it's the way that probabilities work, right? I mean, the probability was rising. There was going to be a hurricane on the East Coast. Then the probability fell, and it was reduced to a tropical storm. And the probability rose that Quad 4 was manifesting if the dollar were to close above trend resistance, and now that is, again, still the case that it's back below that. You know, that's how probability in real life works. Everything else you've been taught otherwise on Wall Street or from ye old wall, it's just garbage. Right? So if you look at the dollar, for example, and again, today's number on the trend is right there on your page. Above that, it's bullish for the dollar. Below it, it could be a big breakdown. So again, that would be really interesting, Jonesy, if we get, like, never mind a 3% move today in oil, which we'll talk about in a second, but if we're to get the dollar to go down 1 or 2% from here and remain bearish trend, that would be rip-roaring fun to the upside for everything that we own. So again, the market's already told you that that's likely the case, not only coming out of Thursday's Quad 4 scare, but what the market did broadly across asset classes on Friday, and of course what it's doing again this morning. So if you get the dollar right, you get a lot of other things right. Do you care why? It doesn't really matter why. We've obviously identified why we think the Fed is late and lagging and all that fun stuff ahead of the Jackson Hole, but the Jackson Hole doesn't even have the Powell. How about that? Powell's not even. Talk about the transparency and accountability of this Fed. He's not even going.
I didn't realize that.
I think he's kind of got the Quad 4 scare. I think he's like, holy shit, I think I did this. Number 2, oil. All right, so number 2. So again, oil, copper, corn, copper's up over 2% here, oil's up over 3%. It's all the same thing. So on that Quad 4 scare, what happened? The dollar, and the dollar, by the way, still is bullish from an immediate term trade perspective. It's bearish trend, barely. It's below it. And the inverse of that is all the same thing, too. So again, you get bearish trade signals in oil. So it's bullish trend, bearish trade. What do you do with that? You probably get a little confused. Again, that's what the market does. It gets a little bit more volatile, gets a little bit more confused. That's the whole point. As volatility rises, trade lines can break, and they can be head fakes or counter trend moves or not. And again, I don't know how this is going to play out. What I do know is I have a process to measure and map it. So again, we'll see how that goes. I'm certainly not shorting commodities. That would be ridiculous. You would have lost, obviously, a lot of money. Probably just about as much as if you bought Bitcoin at 62,000, 10% of your assets, and then collapsed at 40,000. That's not the way to do this. Again, it's incrementally, and again, observing, waiting, and watching. So oil's a real important one. So write that down again. From an immediate term trade perspective, that is still broken. So it didn't break 60, and it's not above 68 is the simplest way to look at that. It's between the rock and the hard place for now.